Securing a high-paying client project or experiencing a record-breaking revenue month is a major milestone for any freelancer. The sudden influx of cash brings a sense of relief and accomplishment, making you feel like your business has reached a new level of success. However, a highly profitable month is also a financial danger zone. Without a disciplined plan, it is incredibly easy to let that windfall slip through your fingers due to impulsive spending, lifestyle inflation, or failing to set aside enough money for taxes. To protect your hard-earned revenue, you must perform a structured budget reset after every high-earning month. A budget reset is a systematic process of allocating your surplus funds to secure your business and personal future before you spend a single dollar on discretionary items. In this video, we will outline the exact steps to manage a financial windfall, how to distribute your surplus cash, and how to reset your budget for the upcoming months. First, you must calculate your true net surplus from the high-earning month by separating your gross revenue from your actual tax and business liabilities. When a large client payment clears, it is tempting to view the entire amount as profit. However, a significant portion of that money must immediately be allocated to non-negotiable categories. You must first calculate your tax allocation, which is typically 20 to 30% of the gross payment, and transfer it directly to your business tax savings account. Next, you must identify any direct project costs, such as subcontractor fees or specialized software tools that were required to deliver that specific work, and subtract them from the total. The remaining amount is your net business surplus. For example, if you receive $10,000 in a month, you must first allocate $2,500 for taxes and pay $500 in subcontractor costs, leaving you with a net surplus of $7,000. This net figure represents the actual cash available for distribution. By calculating this number before making any spending decisions, you prevent the common error of spending your tax reserves or operational capital, ensuring your business remains compliant and liquid. This step is critical because gross numbers can create a false sense of security. When you see a large balance in your checking account, your brain tricks you into thinking you have more disposable income than you actually do. By immediately carving out the tax and expense portions, you face the raw financial truth of your windfall. This analytical habit protects you from tax season surprises and ensures that you are only making spending or saving decisions with money that actually belongs to you. This systematic deduction is the foundation of professional cash management for solo operators, allowing you to manage your business with clear confidence. Second, you must allocate your net surplus cash systematically using a predefined priority list rather than relying on impulsive decisions. You should distribute the surplus funds across 4 key areas in order of importance: your baseline budget, your slow month buffer, your business debt, and your long-term savings. The first priority is to ensure your current month's essential business and personal expenses are covered. The second priority is to fund your slow month buffer, which should hold 3 to 6 months of baseline expenses. If your buffer is not fully funded, the majority of your net surplus should go directly into this account. The third priority is to pay down high-interest business or personal debt, which reduces your fixed monthly overhead and increases your future profit margins. Only after your buffer is funded and your high-interest debt is eliminated should you allocate funds to the fourth priority, which includes investing in new business equipment, learning new skills, or funding personal savings goals. For instance, if you have a net surplus of $7,000, you might allocate $4,000 to your slow month buffer, $2,000 to debt repayment, and $1,000 to a business equipment fund. This structured distribution ensures that your windfall is used to build a stronger financial foundation, rather than being wasted on short-term discretionary purchases that do not contribute to your business stability. Having a priority list written down in advance eliminates the emotional decision-making that often follows a high-earning month. Instead of wondering how to spend your extra cash, you simply follow your plan. This disciplined approach builds your financial runway and increases the resilience of your business. You stop viewing a windfall as an opportunity to splurge and start seeing it as a tool to purchase security and freedom, ensuring your freelance career remains sustainable over the long term. Finally, you must perform a budget reset by keeping your personal salary draw fixed and adjusting your marketing goals for the upcoming quarter. A common mistake after a big month is increasing your personal salary draw, assuming that your new revenue level will continue indefinitely. To maintain stability, you must keep your personal paycheck at your calculated rolling average, regardless of how much cash is sitting in your business checking account. The extra money remains in your business buffer to support you during future slow months. In addition to keeping your salary fixed, you must evaluate your marketing pipeline. A highly profitable month often indicates that you have successfully executed high-value projects, but it can also mean that you have spent all your time on delivery and neglected your prospecting. Use the momentum of your successful month to reset your business development goals. Spend a few hours reaching out to past clients, updating your portfolio, and sending new proposals to keep your pipeline full. To implement this budget reset system, write down your surplus allocation priority list this week and calculate your tax liabilities for your next project. By separating your net surplus, distributing cash systematically, keeping your salary fixed, and resetting your pipeline goals, you can turn a temporary windfall into long-term financial security. This structured system replaces impulsive spending with strategic planning, ensuring your freelance career remains resilient and profitable over the long term. Ultimately, a big month is not just a reason to celebrate, but an opportunity to secure your business against future volatility. By taking control of your windfall and allocating it to buffers and debt reduction, you build a business that can survive market downturns and support you on your own terms. This operational discipline is what separates long-term successful freelancers from those who are constantly riding the waves of variable cash flow, enabling you to build a career that is both financially rewarding and personally sustainable. Freelancer Finance Desk helps independent workers manage money with more clarity. The channel explains irregular income, invoicing, tax basics, cash flow planning, business expenses, emergency funds, and simple systems freelancers can use to stay organized without pretending there is one perfect setup for every solo worker. This video is general financial education, not professional accounting, tax, legal, or investment advice. Freelance rules, tax requirements, and business structures vary by country, state, and business type. Consult a certified public accountant or advisor for specific guidance.